In the modern labor market, autonomous software agents are independently writing complex code bases, conducting deep case law research, and actively identifying and patching network security vulnerabilities. While computer scientists continue to debate the arrival of theoretical AGI, a machine capable of matching human cognition across any task, the enterprise sector has already moved on to functional AGI. These are autonomous systems that are actively substituting for human labor in roles previously defined by codified knowledge. But there is a distinct gap in the narrative. Despite these systems routinely saturating PhD-level reasoning benchmarks and achieving perfect scores on graduate-level mathematics, no major technology laboratory has officially declared that artificial general intelligence has been achieved. This discrepancy between what these machines can do and how they are officially classified suggests that the arrival of AGI is being managed as a matter of corporate strategy rather than pure technical progress. The roots of the strategy are found in a contract that funded the current AI boom. In 2019, Microsoft's initial investment into OpenAI included a highly specific provision known as the AGI clause. The clause creates a rigid legal boundary. If OpenAI ever achieves artificial general intelligence, Microsoft's exclusive intellectual property rights to the technology are terminated. The moment the intelligence is officially declared general, the commercial pipeline shuts off. To understand the pressure to keep that clause from triggering, consider the scale of the investment. Microsoft committed roughly $13 billion to OpenAI over several years. As of early 2026, the paper value of that equity stake has swelled to $228 billion. For Microsoft CEO Satya Nadella and OpenAI CEO Sam Altman, the continuity of their alliance relies entirely on preventing a formal AGI declaration. Because these tech leaders oversee massive multi-billion-dollar empires, they have focused on more than just the research. They have established a legal definition of intelligence that protects their commercial interests. Despite their public partnership, both companies are starting to prepare for a future where they no longer rely on each other. With pure language model scaling yielding diminishing returns, both sides are quietly hedging their positions. OpenAI restructured into a public benefit corporation to attract uncapped institutional capital. They are also moving towards specialized high-margin models, such as GPT 5.4 Cyber, designed to capture specialized enterprise and government markets. Microsoft is countering with its own move towards self-sufficiency. Under the leadership of AI CEO Mustafa Suleyman, the company is building a suite of in-house foundational models, known as the MAI series, that operate entirely independent of OpenAI. These MAI models process audio and images while cutting Microsoft's GPU inference costs by 50%. This allows Microsoft to deploy capable AI across its entire product line without paying licensing fees to its partner. This mutual diversification suggests the partnership is moving away from total dependency toward a form of competitive self-sufficiency. In late 2025, the two companies formalized a new agreement that effectively disarms the original 2019 AGI clause. The new structure introduces a major hurdle. Even if OpenAI believes it reached AGI, the claim must be verified by a secretive, independent expert panel. This removes the OpenAI board's authority to unilaterally declare the intelligence milestone. For Microsoft, this is a massive win. Their intellectual property rights, including commercial access to post-AGI models, are legally secured through 2032. OpenAI, in turn, received a locked-in $250 billion Azure cloud computing commitment to fund the massive physical infrastructure required for their next-generation models. By transferring the power to define AGI to an external, secretive panel, the two tech giants have secured their alliance against the very trigger that was designed to end it. This pursuit of AGI is manifesting in massive industrial footprints, such as a 520-megawatt data center campus under construction above the Arctic Circle in Norway. The hundreds of billions poured into this digital infrastructure has created a debt-fueled investment bubble. While this spending adds a temporary boost to GDP, it is masking the real-world displacement of white-collar workers whose roles are being automated. Because the capital required for this technology is so concentrated, a legislative reaction is beginning to form against the companies that control it. In California, a proposed wealth tax targets the unrealized net worth of billionaires. It is an unprecedented attempt to capture the massive equity gains generated by the AI boom. Simultaneously, municipal governments are launching universal basic income pilot programs, providing unconditional cash assistance to a workforce facing rapid, technology-driven changes. While tech giants manage the legal definitions of intelligence to protect their valuations, the actual economy is already beginning to fracture under the pressure of autonomous systems. Most people expect AGI to arrive as a singular cinematic event, a moment where a machine finally wakes up and introduces itself. But because of the complex legal frameworks and multi-billion-dollar penalties tied to the term, AGI will never be announced at a press conference. Its arrival will be gradual, a relentless absorption of human cognitive labor conducted behind non-disclosure agreements and humming server farms. The future won't be announced by a superintelligence. It will be quietly absorbed by the corporate bureaucracies that own the legal definitions.